Good morning, everyone. So let's start with the global news update for today. US markets remained shut on July 4th for Independence Day. In the previous trading session, the benchmark indices S&P 500 and Nasdaq had extended their rally to new highs during intraday trade. The UX stocks index future moved little in holiday-themed trade on Thursday evening, with focus turning squarely towards key non-farm payrolls data for more cues on interest rates. Japanese household spending unexpectedly fell in May as higher prices continued to squeeze consumers' purchasing power. Data showed on Friday, and complicating the central bank's decision on how soon to raise interest rates. The exit poll indicates that the Labour Party is heading for a historic victory in the parliamentary election, while Rishi Sunak's Conservative Party is predicted to encounter a record defeat. Keir Starmer, the leader of the Labour Party, is on the brink of becoming the next Prime Minister of the United Kingdom, based on the latest exit poll predictions. Asian share markets scaled new highs on Friday as investors sized up US rate cuts for September, and the mood was upbeat, while the euro hit a 3-week peak ahead of French elections. So these are about the global news update. Move on to the Indian market update. Yesterday, the Nifty, after the initial gap up rally, then corrected and then finally closed at 15.65 points. So for today, Nifty level should be the next level of resistance would be at 24,432, followed by 24,500 level. On the downside, of course, the support could be at 24,230, followed by 24,200 level for 11th July expiry. So option chain data suggests support is still at 24,000 intact, and resistance is at 24,500. Currently trading at 24,350. Could be a intermittent support at 24,300. So if it is not broken, we can probably head towards 24,500 soon. Bank Nifty was pretty much sideways to flat yesterday, and it closed at 14.45%. For today, the next level of resistance is at 53,448 or 500, followed by 53,700 level. On the downside, we can expect it to take support at 52,647 or 600 level, followed by 52,200 level. So as of now, Bank Nifty is looking flat sideways, as both call and put side highest to highest is residing at 53,000 level. So kind of indecisive at the moment, but we are seeing a resistance building at 53,200 level. So there's a possibility we can, if this 53,000 is broken, we can touch 53,200 and then slide towards bottom side. Mid cap Nifty did pretty well. Yesterday also it rallied to new highs, and it rallied almost 325.30 points. So for today, next level of resistance could be at 56,800, followed by 57,000. On the downside, of course, it could be at 50. Support could be at 56,448 or 400, followed by 56,200. Small cap also did fairly well compared to primary index. It rallied around 92.40 points. So upside, the resistance could be at 18,890 or 18,900 level, followed by 19,000 level. On the support side, it could be 18,600. Followed by 18,650, followed by 18,600 level for today. So that's about the indices. So sectoral data, shipbuilding was one of the top trading sector, so which is heading towards saturation. And the abrasives also, and paper also almost heading towards saturation. So probably the next sectors that are attractive as of now is plastic products, construction materials, logistics, consumer durables, IT. Of course, IT continues to be one of the top performing sector. Industrial gases and fuels, photographic products, aviation, telecom, agriculture, electrical, FMCG, chemicals, retail, iron and steel, banking, finance, automobile ancillaries, healthcare, textile, mining, realty, power. So pretty much almost every sector we have opportunity now to buy on dips. Let's look at the deliveries for today. The positive deliveries, photographic product continues to see rising delivery. Shipbuilding still continuing with a huge amount of delivery. Apart from that, capital goods and hospitality has seen good positive delivery for today. So these are the sectors that we can look for short-term trading. Now let's look at the basket for the current week. So these are the three baskets that we have recommended for this week. Best large cap stocks basket, expected return 10%. Best auto stock basket, expected return 10%. And best private bank stocks, expected return 10%. Now let's look at the performance review of the previous week's basket that was recommended. So energy has recovered from negative and today it is positive at 6.53% by yesterday's closing. IT has achieved a 50 target of 15%. So people who invested probably can consider booking some profits. Media baskets also have achieved its target of 10%. Oil and gas is also near its target of 15%, so which is at trading at 12.23% profit since its recommendation. Which is about 2 weeks. So I think it's a phenomenal returns, and it looks like it's a real bull market. So it's whatever it is, but the overall returns seems really promising. No, as of now, I have not seen any new update apart from the inclusion of petroleum products into GST and the FNO taxation on so that the 30% taxation on FNO profit. So apart from that, I have not seen anything major unless.
There is a news that Chandrababu Naidu is giving the list of his expectations for Andhra Pradesh with the
Yeah.
funding to refinery, all those to be added in the budget. So that is
Okay.
something that will be keenly watched in the budget.
Yeah.
So there's a meeting happened between him and the Prime Minister, and of course, there's nothing that comes out,
Mhm.
but still there is speculation that there is going to be more demand from Naidu.
And of course, the UK exit poll suggests that there could be a change in power. So the Labour Party seems to be winning, and Conservative Party seems to be losing by big margin as far as the exit poll is concerned. So we need to see how that. So I think the Europe will have some impacts due to the shifts in power. Of course, we have seen in the French election the far right party is winning there, and now UK also. So maybe there will be some shift in the equation, power equation, as far as Europe is concerned. We need to see how that impacts the economy, the world economy.